Welcome back. This is Denise Nostrom, the Financial Chick. My company's in Medford, and you can reach me at 631-758-8691 or visit the website at financialchickshow.com. I'm here to help you on your financial journey. Things change, and I'm here to help you navigate all those changes over time. And I'm also here with my co-host, Mike Scaro.
Second half.
Second half of the show. So we're still here. If you have any questions, you can certainly give us a call at 631-451-1039, or you can text the LA News Radio text line at the same number, 631-451-1039. So, just been kind of tossing around a few things today about some stuff that happened this week in the office. So, we had another case of a client that I acquired a couple of years ago, and it's an annuity contract, and the annuity has what's called a guaranteed income rider on it. And that basically means that there's a fee to do that, but that's income that this client could never outlive. The problem, or the issue, I guess not a problem, but the issue that this client has is that the client has a lot of money. So when they purchased this many, many years ago, it might have been pertinent to their situation, but the market's done well from them. They have a good amount of money that they don't need it. It's almost like buying a cold weather package on your vehicle when you live in Hawaii. It's just something that you don't need. So in meeting with the client, I suggested taking this particular product and moving it to something else just to save some money, because he didn't need it. And the other thing that, but I guess add more insult to injury, was that the company increased the fee on that guaranteed income rider. So it was kind of an easy thing to say, well, you don't need it, but then you're paying more for something that you don't need. So I love these annuities for the right person with the guaranteed income rider, especially if it's something that you want to have set income for yourself. You might have Social Security, you may or may not have a pension, but you want to say, I want to have 4 or 5, whatever your number is, a month. This is a great product to have. But if you don't need it, why do you have it?
Yeah, exactly. I mean, even it's a nice feature to have, but like with anything in life, not even just annuities, you don't want to be paying for something you're not using.
Exactly.
So
exactly.
Even if that could be like a streaming service in real life, same thing for annuities. If there's a feature to it that you're not using, you might as well get your bang for your buck and move to a product where you won't be spending that kind of money on something you're not using.
Mm-hmm. So that's why when we have reviews with our clients, that's what we do. We take a look at everything. Things have changed. That's why it's so important to get together at least once a year, because things are constantly changing in your life. Maybe inheritances, or you have another income stream. A couple of years ago with the it's called WEP, and I don't remember, windfall elimination something, and I had a client that didn't get Social Security, just because this particular person worked for the IRS. But they changed that, so they got a lump sum and they started getting Social Security. So what we did was we met, we changed the amount of money they were taking out of their portfolio, because they didn't need that much. So, the more you take out of your portfolio, the more taxes you have to pay.
Right.
So if you don't need it, so we had to make some restructuring. So there's always something that's going to change. And that's why I encourage people our clients to meet with us at least once a year. And most do. Some don't. We have those people out there.
Yeah, we've plenty of good ones.
No, we hope about it, but yeah.
Plenty of good ones.
Yeah.
But it is definitely very important. Everything's changing, not only in just people's lives, but in the world. With the markets constantly, so it's external and internal factors for people that are constantly changing. So you got to keep up with that.
Absolutely.
Really good.
So that was one thing, and then I have another client, and she had come to me it's about 5 years ago, and she was just very downtrodden. She's had a change in her situation. She lost her spouse, and so we were working through all of those things. But she's like, I am never going to retire. I can never save money. She's like, it's really, really challenging. And she did have a really, really hard time. But we put together a portfolio for her about 5 years ago, and she gets money every year from a source. And so back in the day, she started with maybe around $50,000, and we decided to do a Roth IRA. She was eligible to do a Roth IRA, so every year we put the Roth IRA in for the maximum amount that she can do. But she also had, we talked about it in our last segment, she had a 401k at another company.
There you go.
Or it was a 403b, and she rolled that over. And she had some other resources, so we said, why don't we do something that's non-retirement? And so she opened up a brokerage account with some stocks. And from that 50,000, just this past week, she's added money over the past couple of years, but a lot of it was growth. But she has almost $216,000. She's grown about over $84,000.
Amazing.
So, and we're doing a bunch of things within that portfolio. So with that IRA rollover, the best thing is to have a Roth. So what we've been doing every year is converting a portion of her money from the Roth IRA, or from the IRA to the Roth IRA. That's a taxable transaction. So we do an amount that's not going to send her to a place where she's going to have to pay a lot in taxes. We work with her accountant every year. But she's transitioned a lot of that money from the IRA to the Roth IRA. And, she felt like she was so behind. She hasn't really saved for retirement. Having a Roth IRA and doing this type of process supersizes your retirement situation. Because the way I explained to her is like, let's just say you needed $1,000. If you took it out of the IRA, you have to pay taxes on it. So let's call it, you got to take $1,250 to get the $1,000 net. But with the Roth IRA, take $1,000 and you're done. So you're paying the taxes today, but presumably we're at a pretty good tax rate. I mean, the tax changes that was in the first Trump administration, he brought them down. Let's say the 28% tax bracket went down to 22. That's a 6% savings. So we don't know what's going to happen. I mean, when he got reelected, he extended those low tax rates, but we don't know what's going to expire. It's sunset in a couple of years, so we don't know where that's going to be. So that tells me this is a good time to do it now instead of later.
Yeah, you never can tell when things are going to change with that stuff, can you? So, I mean, if you're in a good environment to do that now, that's a hell of a plan. That really is. I mean, just get it over with now so you can save yourself later. Because again, you never know what's going to happen for you later, and saving on those taxes might be a lifesaver for you.
Absolutely.
You never know.
Yeah.
So that's
and again, it's knowables. We know what the tax rates are now. We don't know what they're going to be in the future.
Exactly.
Could they be lower? Maybe, but with the odds, probably not.
Work with what you know.
Exactly. And then her brokerage account, over time she put in about $79,000. She took out $15,000 because her daughter's getting married in the new year. Actually, about a month before you. Actually.
That's right, yeah.
So, and then, so that's 79, we'll net it down, say 64. She's got over 125,000 just in that one. So, had some really good stock picks and stuff like that. So, she's very happy. So I'm excited about sharing those types of things. So, and I love that. And, now she feels like she has a little bit more hope. She's like, wow, like this grew and, I'll have some money and, she does own her home and, so she has some different alternatives, but sometimes it's just knowing. We think like we look, oh God, we don't have a lot in our bank account, or maybe we have everything in retirement, and whatever the case may be. But sometimes get a second opinion, you can see a little bit better.
Yeah, like if you have that money in your bank account, see what strategies that your advisor could implement to make that money work better for you while you work your tail off yourself.
Yeah, let your money work as hard as you're working, right? Let it grow, and that's the thing. But people, and a lot of times we don't really go into investments or meet with an advisor because we're nervous and we're scared. It's uncharted territory, but I'm not frightening. Am I scary? I'm only kidding. No, I'm kidding. But honestly, don't, just have a consultation with me or anybody, to just know where you're at. I mean, you can, as I say at the end of my show, do better and be better. You can.
Yeah, absolutely. And those are the best kinds of things, like stories that'll start off sad. And you see years later after they're working with you for a few years, you see how they end up ultimately after starting out sad, and you see the great place that they're in after working with you. Those are the best kinds of stories. And
that's why I love what I do, because I become part of the family, so to speak, they become part of my family, and you get vested into their situation, and you generally want to help people, you just really want to do. That's why it's a wonderful career.
Yeah.
And you'll be coming into real soon.
You're
ready, but
Yep, the massive reason for the pivot, man.
Yeah,
that was, and I've been reading an awful lot more about it. I'm studying for the 66. Yeah. Rocking and rolling, man.
We got to talk about some stuff in that too.
Yeah. Oh my gosh.
Where
do we begin?
I know. Where do we start with that? But yeah, so after the break, we're going to have our last segment of the day. We're going to talk a little bit about the markets and what has been going on, and see where we go from here.
Yeah, speaking of markets changing, got some stuff to talk about with that.
Amen.
So stay tuned for that.
Yes. So I guess we'll get back the time I was running late last time. All right. Well, stay tuned after the break. We have so much more. Thank you.
Nice.
Alrighty. That's good. Now I'll just reference this one thing here. Do you hear this thing squeaking? You didn't hear that? I don't know. No, it's just.
Oh, you hear it?
Yeah, I don't know why that does that. Sometimes it's.
Not from here right now. I didn't.
No, it's good. I don't know. It's just the way they fall. I guess the earphones.
Yeah, tech took a bit of a beating. That would be a good talking point.
AI is having a hard time. Yeah, there's something in here.
We could also talk about, in that same breath, since it's on the NASDAQ, with tech, we could talk about how SpaceX and Tesla in the last couple of days go walloping too.
Yeah.
Especially tech,
13% yesterday.
Yeah.
I don't even have it on here. SpaceX. I should track it actually.
I think it's
1 minute.
I think it's still
Thank you.
floating around like 113, 12-ish.
No, but I can I can save it and so I don't have to actually look it up. But I didn't do that. I should have done that the other day.
Oh, you favorite it almost? So
Yeah.
Gotcha.
Oh my goodness. Yeah, 115 today.
Damn.
Oh, it was only down
30.
28.5%.
Oh, that's what we do.
Yeah, it's not bad.
You recover that in the day. It's all good.
Ooh, yeah.
Ten.
Yeah. Well, welcome back. You are listening to the Financial Chick Show. I'm Denise Nostrom with my co-host Mike Scudero.
Last one, Denise.
Last segment of the week.
Like always, do we even know how we got here?
It's like Groundhog Day. It just keeps going.
Oh, my
It's the
God.
same day over and over, but on Friday, but it comes here so fast. But
Exactly. Well, if anybody out there wants to talk about any of the things we've talked about so far today, whether it be retirement planning, tax planning, whether you're a morning or a night person, then just give the station a call or leave a text message. Same number for both, 631-451-1039 if you want to chat with us.
sounds good. Sounds good. Well, listen, let's talk a little bit about the markets.
Yes.
See what's been going on because, people come in the office like, oh my God, am I losing a lot of money? Are things good? Things are very volatile. I'm scared.
Hearing stuff on the
So-
news.
Yeah, well.
Well,
exactly.
yes. So, I mean, it's a good segue from the kinds of things we were talking about last segment when it comes to planning and the importance of meeting regularly and coming in and keeping in touch with us. Because things are always changing, and part of that was the markets. And this last week or two, we've seen some of that. Because from year to date, from the start of the year and also in the last rolling year, we've seen a lot of green, lots of good. So for instance, in the last year, in the S&P 500, we've seen 19.9% in the green. For the Dow Jones, we've seen 19.2%. And for NASDAQ, which tech over the last couple of years has just been a home run. I mean, it's been crazy. 22.9%.
And mostly driven by AI.
Mostly driven by AI, yes. And even year to date, 9.6% in the S&P, Dow Jones 9.4%, and the NASDAQ 10.2%. So it went down, but still plenty in the green. Now in the last week or so, we've seen a bit of a shift. Multiple factors in this, AI being a major one.
Yeah.
But the S&P in the last week has been down 1.55%, Dow Jones 0.93%, so not as bad. And the NASDAQ we've seen nearly 3% at 2.9% down. So obviously people see this and you got to keep some perspective, be like, yeah, it's down over the last week or two, but overall, with how things have done the last couple of years, probably still well in the green. All good, but
Well, we saw, the average, 7 to 9%. If you're in the equity markets and you're doing, 19, in a year over year, I mean, that's pretty good. The way I say to my clients, take it while it's hot, but take some money off the table.
Exactly. And this is, in a time like this is where you might start getting some more calls or some people asking about it, and this is where it's good to meet up so you can make some of those changes.
Yeah.
Rebalance your accounts, all that good stuff.
Yeah.
Move out of or into certain sectors more. And speaking of sectors, there's some interesting data on that as well. Top 3 S&P equity sectors year to date for 2026. Energy has been up 30%.
And that's like less than a full 7 months. You know?
Yeah. That's
a remarkable, and of course, energy being oil and gas, so that's
Right.
not too shocking.
Yep, exactly.
Although it was a lot higher. I mean, I've seen it rose up at 45. I get this report we get every week.
Right.
So, yeah.
Yep. And industrials, we even have 16.5% there, and real estate at 15.3% as well.
And that's a shocker. That one just popped out of nowhere. We haven't seen real estate. We have seen real estate, but we've seen it on the bottom 3.
Right.
We haven't seen it anywhere near the top 3, so that's very intriguing to me.
Yeah. It's very interesting seeing the constant shifts and everything. And you see some of these numbers, and it goes back to what you said before, like a matter of keeping perspective is very funny. And I've seen a lot of these numbers solely because I didn't really know much of anything about finance personally before I started working with you. I didn't keep track of the markets, not really much of anything.
Mm-hmm.
Even outside of just listening to like you on the radio here, other advisors who have radio shows as well. But all I've really seen in my time following are these like crazy numbers and everything. So I have to like even remind myself, like 4 to 8%, 9%, like that was always considered like, oh, you're doing really, really great.
Mm-hmm.
Now in the last like 2-3 years, we get people coming in and be like, yeah, oh, you're doing 25%, or even in like one fund, oh yeah, it's doing 90%. It's like, oh, what can I do to be better? You're like, what? Like, it's just.
And you know what's interesting? Like again, they're talking about that there's such concentration risk right now because most of the play is the Nvidias, Google, Meta, Palantir. Like this is where most of the money's being made. So it's not a broad-based market. So you really have to look at your portfolio. Because I was just talking to a client or working with a client today, and she had one biotechnology fund that was up 75%. And that's wonderful. It is wonderful, but it's not going to replicate that. So taking someone off the table, putting and rotating into something that hasn't been doing so well, like one of the companies that showed was Clorox. Clorox was down like 27%. And like, well, gosh, like that's like such a basic company like that. People will hear of Clorox, but maybe not have ever heard Palantir. You know what I mean? But it's such an interesting market right now.
Yeah. Well, speaking of things that might have been way down or might be way down right now, and this actually does contribute to the NASDAQ numbers that I read out to you before. We have seen some interesting trends with SpaceX and Tesla this past week.
Mm-hmm.
About a day ago, I believe it was, you said Tesla was down about 14%.
And yesterday it was down 14, and we were just checking during the break. SpaceX was down 28.5 today.
Yeah, wow.
So, and we talked about this when the IPO was out there. That I'm not a big jump and get it the first go around. A lot of times this happens. And sometimes it's just circumstantial too. So, Tesla and SpaceX, they're kind of connected. So it seems like they're kind of working off each other. If one pops up, probably the other one will too. And you'll find that in sectors too. Like if you have a healthcare sector, and like Eli Lilly does really well, it usually pulls up all the other healthcare companies as well. And conversely, if something goes down, it's going to drag everything down. I think you were saying that yesterday with that brought down the NASDAQ. I mean, Tesla was one of those ones that did it.
Yeah,
so.
Exactly. It's just crazy to think about how the the IPO stuff again with perspective. Like it opened at 135 or 150, and then it shot up well over 200 at one point, and now it's at 115.
Yeah. So the 52-week high was 226.
Yeah.
And we're sitting at 115 right now.
Yeah. Came back down to earth. Pun completely intended.
Mm-hmm. For real.
So, yeah. So so that's just a point to consider again. So we'll see how the week that they have next week, those kinds of companies that are under Elon, see how it goes.
Mm-hmm.
So we had the top 3 sectors now for the S&P. We had energy, industrials, and real estate. Now the bottom 3, Some interesting stuff here. Consumer discretionary, it's in the red, 1.6% down for that. Communication services, it's actually up 2.5%, and financials up 3.6%. So even the bottom three, you got a couple in the green there.
And it's interesting, like, halfway, a little more than halfway through the year, that's not bad, because,
No.
if it continues on, like, that'll be good, but the numbers are so skewed on the other side, it looks like, that's all I got? Like, I'm only getting that? That's just terrible, So it is really, really interesting what's going on. But one from Franklin Templeton Institute, I get different things that come through my office, and overall, the sentiment that he's saying is that the percentage of bullish investors, meaning people that feel positive about the market, in the latest survey is 45%, whereby the percentage of bearish investors, people that are not feeling very, very favorable about the market, is 33%. Basically, he's saying no signal here that he sees that there's a wall that. Let me repeat that again. They're saying that there is still a wall of worry in place right now, so people are still kind of a little reticent about the market. But bull markets peak on euphoria, and he does not see that we're there yet. So from what they're saying is that there's still a lot more room to run, but I would still rebalance your accounts. It's always better to be ahead of the potential downturn than living through the downturn. That's not so fun.
Yeah, and like you said, it could always be about just seeing what you're invested in and seeing how it's done lately. If you're doing 80% in a fund, probably not going to stay that way for much longer. It's safe to assume. I mean, who knows, it could, but safer to assume. I mean, it's just a matter of keeping up with it.
Exactly.
Staying current.
Exactly.
So
any big plans for the weekend?
not too much. On Monday, we have my fiance and I are going to make a beach day. Tomorrow, go to a Met game.
I was going to say, you're going to the Met game.
Yeah.
Look at Zach, man.
He said,
He's
sorry.
like, don't go. No.
No, I haven't even been to a Yankee game yet this year. I'm a Yankee fan. I'll be at a Met game before a Yankee game this year. Figure that one out. But how about you?
Reunion.
There you go.
The icebreaker this evening, reunion tomorrow, and
Anything else Sunday, Monday?
no, just
Chilling?
no, just chilling.
There you go.
Thank you all for tuning in today. Have a great weekend, and may the market be with you. Whew, and it just like shot at the end.
Yeah, holy crap. It always does.
All right. Well, Facebook, thank you for tuning in today.
Thank you, guys. Have a good weekend.
Yes, have a good weekend. We will see you soon.